To kick off the event, please welcome the Managing Director of Hyperinflation to give us the welcome remark, Mr. Wale Odutola.
Hey, thank you very much, Raphael, and good morning, everyone. Unfortunately, I can't switch on my camera, but if someone can help me do it remotely, that would be good. Thank you once again, ladies and gentlemen, for joining us for this session. We typically do this ever so often, and the whole point is really to help our clients and non-clients make better investment decisions. In periods like this where you have so much uncertainty, so much volatility in the macroeconomy, and then you have the overhang of elections coming up next year, clouding the investment horizon. It is oftentimes very difficult for individuals to pay attention to what is important and focus on what is important, and close out all the noise that typically exists in periods like this. And our objective is really to help you focus on the important things. You have long-term goals, you have aspirations, you have things you want to achieve. And you must achieve those things despite the uncertainty, despite the issues that we continue to face as a country. Those objectives need to be achieved. You want to send your children to good schools. You want to prepare for retirement and ensure you have a good, healthy balance of investments that can see you through retirement. You want to invest in yourself by going to school for your master's degree or a postgraduate or a doctorate degree. All of those aspirations need to be met despite the uncertainties that we face that continue to make planning difficult. And our job as your advisors, our job as your portfolio manager or investment manager is to help you make sense of all of these things and help you plan better and help you achieve those objectives that you have. So that is what this session is going to be about. We will hopefully have a healthy discussion around the Nigerian economy, and we would also share our outlook. But more importantly, we'll share the things that you need to be paying attention to in order for you to meet those objectives that you have. The team have worked hard to put these presentations together, and I'm confident that there will be many takeaways for everyone from this session. And hopefully, you can re-engage with us again after the session in order for us to maybe provide a bit more detail, maybe help you plan a bit more better, and also take action, which hopefully is what we expect that would happen from this session, that you will take action and take control of the things that you need to take control of in order to be successful in whatever investment decisions that you're taking. Thank you very much once again, and I wish everyone very good deliberations. Thank you.
Yes, you have objectives and you must achieve those objectives, and that's why we're here. Very encouraging words from the Managing Director of Hyperinflation as he gave us the welcome address, Mr. Wale Odutola. Thank you very much for that. So very quickly, let's take note of the house rules. Please note that this webinar is being recorded. Leave your questions in the Q&A section anytime they cross your mind as we carry on with the discussion. We'll do our best to address all the questions during the segment, and for those questions that we're unable to attend to because of time, we will ensure that we respond to them after the event and send them to you along with the recording of this webinar. To usher in our guest speaker, we will quickly take this opinion poll. And the question is currently showing on your screen. In the current environment, what troubles you the most? What troubles you the most about investing in Nigeria and abroad? You can drop your responses in the chat box. Please keep them coming. We will do this for about 20 seconds. And this is just to set the background for the presentation that will be anchored by our guest speaker in a few minutes. Thank you very much. We would look at these responses shortly. So very quickly, introducing our guest speaker, a lead investment research with years of experience in investment research, portfolio management, and leading financial institutions in the country. Today, he leads the investment research team in the ARM Securities business of ARM. He's very experienced in the gas and oil sector. He will be giving us the background to the discussion that we'll be having today. Please welcome Mustafa Alao.
Thank you, Raphael. Good morning, everyone. Once again, you're welcome to the webinar. We definitely don't take your attendance for granted. So the way we're going to start this discussion is that we're going to just have a very brief overview of some of the key macros, within our economy. A lot of it, are already topics that have been very prevalent in the air, in the atmosphere, and I think it's important that we begin with this. So looking at our Nigerian economy, in terms of GDP performance, now if you look at what GDP is essentially measuring the monetary value of all the goods and services, right? That is those that are bought by the final user and are produced within a country over a period of time. It's essentially accounts for general production and outputs within that country. Now, if you look at Nigeria, our economy is generally divided into the oil sector and the non-oil sector. Now, the oil sector has definitely been something that has taken a significant beating for quite a while now. We've seen contraction in that area, for a significant amount of quarters in a row now, especially since the 2020 COVID-19 pandemic hit. We saw that the Nigerian economy suffered as we entered a recession in the year 2020, and the oil sector, entered a contraction in that period. Of course, many of the factors that has been contributing to the below par performance in our oil sector have been things like constraints when it comes to production. We're looking at the oil theft as well. That has been a topic that has been very much prevalent. We're also looking at pipeline vandalism. As a result, secondary sources say that we are producing at 1.2 million barrels per day of crude oil, and apparently it's supposed to be even less than that due to some of the primary sources from organizations like OPEC. So there's definitely a problem within that sector, and that is what has generally been a drag to the Nigerian economy and the performance of our GDP. But amidst all of this, amidst the global economy that has been engulfed by the resurgence of COVID-19 cases in China, especially earlier this year, and of course a lot of the geopolitical tensions that is happening between Russia and Ukraine, Nigeria's growth has still remained positive. So yes, we're in a positive space when it comes to the growth of our GDP. However, we're still suppressed due to many of these woes that I mentioned earlier, especially within the oil sector. Now, what has been keeping the Nigerian economy afloat is the performance or the activity in the non-oil sector. So we see that the non-oil sector has been essentially, driving the economy so far. We've seen that sectors like the ICT sector, that's the information, communication, and telecommunication sector, it has been the major contributor to growth. In the recent results that was released by the National Bureau of Statistics, we saw that this sector expanded by 6.47%. That's for the second quarter of 2022. And this is largely attributable to many of the, development and advancements in technology within that sector. We're seeing the recent rollout of 5G in some states in the country. right? And we're also seeing some other technology, being implemented to further enhance the growth in the sector. Other sectors that has been seeing growth has been the trade sector, the transportation sector, the manufacturing sector as well. Now, going forward, other factors which are quite prominent when it comes to the Nigerian context is the Naira, the currency, and that is something that a lot of our audience, expressed that they have concerns with. We've seen that the Naira has taken a significant beating, and the basic factor that has, contributed to that really is that there's illiquidity, right? There's dollar illiquidity, and that's ultimately linked to the fact that we are not generating enough revenue and we are importing a lot, right? So if you look at the figures that you can see on your screen, you can see that our external reserves at the moment they are just about 39 billion US dollars, and this is amidst a year where there's what people tag as an oil boom. We've seen that this year oil prices has been relatively high. Other countries like Norway are enjoying the benefits of this, but here in Nigeria, we're just not benefiting from that as well. And of course, we're dealing with all of the issues I mentioned earlier with the oil theft and so on. And the second part, we're importing a lot. We've seen high levels of education importation, high levels of healthcare importation. That essentially means a lot of people are leaving the country in order to get education and thereby them needing foreign exchange. So all of this has put pressure on the Naira, Now, if we look at the official window, we've seen that the Naira at the moment is about 430 Naira to a dollar. However, if you look at the parallel market window, it is allegedly about 690 Naira to a dollar, which is I know is the prevalence on many of the tongues of many people here in Nigeria, and that's because there's a lot of pressure on that market due to there being all the regulation that we're seeing on the official window. So as the pressure continues to mount, we'll continue to see the Naira continue to devalue, and we expect the Naira to weaken at the official window to as low as 450 Naira to a dollar in 2022, with increased repatriation of funds from Nigeria and a lot of people, not finding the Nigerian economy attractive to invest. We're keeping all those funds away from the country, and until steps are taken in the direction of making investors attracted to the country, and things regarding oil theft are sorted out. Until then, that will start to see an improvement in that regard with our currency. Of course, inflation as well. Inflation in Nigeria, an economist doesn't need to explain to the average Nigerian what is happening, right? We are seeing that prices of everything have skyrocketed. The amount of the price you spend on a bag of rice this time last year, we know how much it has increased by now, right? And of course, a lot of things are contributing to this factor. If we're looking at the shortage in supply and production of food, right? We're seeing that there's a lot of insecurity in the middle belt of the country, that where the food basket of the nation is situated, right? And that has constrained and restricted food production, and ultimately led to the increases in prices of these commodities. And of course, we're also seeing imported inflation with the Russia-Ukraine crisis, or conflict rather, happening. We're seeing that there's increased imported inflation with commodities like wheat, fertilizer, grains, potassium chloride. These things are getting more expensive, right? So all this is contributing to the high levels of inflation we're seeing at the moment. It is 19.6% on a year-on-year basis for July, and we expect it to go to as high as 21.5% by December. So we expect an average of 18.8% for the whole of 2022 when it comes to inflation. Now, amidst all of these, right? I mean, it sounds like it's all just bad. How do we now make money amidst all of this? We talk about inflation, real rate of return. How do we grow our wealth amidst all of this all of this negativity that's pervading the economy, right? Well, some of the things that were highlighted for a lot of investors to consider when they are looking to invest is, many of the factors which you mentioned earlier, one of which is exchange rate concerns. This is something to consider when you want to divert your funds to any asset class, right? If you look at the equities market, for example, we'll see that there are some stocks, for example, that are dually listed. And if you look at the direction of the Naira, that might be something that you might want to consider, right? It's also important to look at the corporate earnings performances of the companies where the asset classes are being backed by, right? Fundamentally sound companies are good places to look to invest. Of course, assessing the general external economic conditions and how that could impact your portfolio is also important to take into account. And looking for stocks, for example, in the equities markets that give dividends so you can benefit from that, as well as looking at the general fixed income yield. We are seeing the actions from the monetary policy perspective, how that could potentially impact fixed income yield. That should be also something that we should take into account. And as we progress within this webinar, we'll expand on a lot of these. Thank you very much, Raphael.
Thank you very much, Mustafa. Just before we introduce our panelists, just to do a quick recap of Mustafa's presentation. This is actually to set us into the mood for the panelists. It's the background of what we'll be discussing on in the next couple of minutes. Mustafa has explained to us the reasons for all these uncertainties that we're currently experiencing in the economy today. And he has clearly stated that there's contraction in the oil sector. However, the non-oil sector has been able to give some level of boost to the economy. He also mentioned to us that expectation is that there will be further devaluation of the Naira, not to scare us, but just to let us have that information. And then he also mentioned that inflation currently on the average is about 18.3, but expectation is that it closes around 21.5 at the end of the year. He also provided a bit of comfort in the investment strategy area. Mentioned to us that the yield is currently on the upward direction in the fixed income space. This is something we can look at. We can also look at companies with very strong fundamentals in the areas of corporate earnings and high dividend yield in the capital market. To further do justice to all of this that Mustafa has mentioned to us, we will be introducing our panelists. To join Mustafa Lao is Ifeoma Okoli, a senior portfolio manager at ARM Pensions with over 14 years experience in investment research and portfolio management. Ifeoma, are you there? Please say hi to our clients.
Good morning, everyone. Thank you for joining us on today's event.
Thank you very much, Ifeoma. And also joining us is Joshua Olutola, a senior equity trader at ARM Securities. Joshua also has over a decade experience. He's an economist and is an active trader on the floor of Nigerians in the capital market, Nigerian capital market. Joshua, thank you for joining us this morning. Please say hi to our clients.
Good morning, everyone. Thank you for joining us, and also thank you for having me here.
Okay, so just to kick this off, we conducted a survey very recently, and the results of the survey shows some of the concerns that were raised by our clients are here with us today. So looking at all of these key metrics, it's revealed that inflation seems to be the major concern, which as a result of the survey is about 29%. Capital markets is about 27% of the responses, and then currency as well seems to be another concern. So if you look at this survey, inflation is topmost, followed by currency, that's Naira, and then followed by capital markets, and then the GDP as well. So we'll be looking at this to set the basis for this discussion today. So what we'll kick off with, let's start with inflation. And I'll be directing this question to our guest speaker, Mustafa. Do we currently experience, or are we currently experiencing hyperinflation in Nigeria?
Okay, so when we speak about hyperinflation, and if we look at real life scenarios where that has happened, we've seen that there have been situations where things out of control have happened. So if we're looking about if we're talking about hyperinflation, typically we're looking at when inflation is reaching about 40% year on year, or even more than that, 40 to 50% year on year. So based on the current situation in Nigeria, I would say no, we're not experiencing hyperinflation. If you look at the Nigerian context and what has been contributing to the levels of inflation we're seeing at the moment, a lot of it has been, due to many of the factors that are also contributing to inflation across the globe. So we've seen in the United States, for example, the inflation issues they are having and the reaction of the Fed to that. We're seeing in the Euro region as well. We're seeing inflation, going above 9%. So it is a global issue, that has been exacerbated, of course, by the Russia-Ukraine conflict, right? So Nigeria is not exempt, of course, from the global economy, and therefore we're also feeling, a lot of these consequences. So these are some of the things that have been contributing to Nigeria's.
Thank you very much, Mustafa.
Should they be addressed? We should start to see.
All right. Thank you very much, Mustafa. You heard it from the expert. He's giving us that comfort. We're not currently experiencing hyperinflation in Nigeria. It's just as a result of the global impact and some internal policies. Hopefully, if the global impact reduces and internal policies are corrected, then we should be a lot better than where we stand today. Just a point of reminder, please continue to drop your questions in the Q&A section. We will try our best to attend to all of these questions before the end of this event. If we don't, trust us, we would ensure that we send the responses to you along with the recording of this event. Going back to the survey, looking at the capital market, we will be speaking to an expert in the Nigerian capital market, Joshua Olutola. What can you tell us about the capital market today, and where do you see those opportunities?
Okay, thank you very much, Raphael. I think looking at the results of the survey, it's not surprising that we had a lot of concerns relating to the capital market. And I think that just speaks to the state of event that has occurred in that ecosystem and the financial market disruption that we've experienced this year globally. And all, when you look at what has happened with the breakdown of ties between Ukraine and Russia and how much of an impact it has affected the global economy. We've seen commodity prices hit record highs, and we've also seen how monetary authorities across the world try to combat these inflationary pressures. And then now bringing it home and looking at the Nigerian capital market, we've also had our own fair share of volatilities. We've seen commodity prices, energy prices also going up, and then the CBN has also come to the market to increase MPR back to back. So I think looking at all this, while we might not have control over the volatilities that have happened, but I think we can pretty much control how we respond to these volatilities in terms of how we react to it, and also in terms of how it affects our investments. And I think the best approach to look at is to adopt a portfolio approach. Gone are those days where you invest in just one singular asset. The dynamics of the capital market right now makes it more compelling for investors to start thinking about investing in multiple asset classes. And if you ask for my view, I would say that I think the minimum asset class that should be up for consideration should be a minimum of 3. We have the fixed income asset class, we have the equities, we have the dollar denominated asset, and also we have exchange traded funds, which are not so popular in Nigeria. But when you look at the developed climes, exchange traded funds are very interesting asset class that a lot of people use to take advantage or to hedge their portfolio, and also to avoid a lot of volatility. And I think to bring it into perspective, right, if an investor is strictly focused on equity, as far as 2022 is concerned, the investor would not have fared very well. On a broad level, the Nigerian equity market has returned about 16% year to date. I think at the moment we are top 10 in terms of best performing exchanges in the world. But when you break it down and look into the individual securities listed on the exchange, you would realize that the vast majority of equities listed on the exchange are either trading flat or trading lower year on year. I think the year-to-date gain we've seen so far has largely been attributed to about 4 or 5 stocks. So focusing heavily on just equities alone might not have been a very good investment strategy considering the times that we are in. And also when you look at the other asset class, which is the fixed income instruments, which has also gained momentum this year. Yields have been on the upward trend, approaching, has also ventured into double digits. We've seen short-dated instruments trading around 15-16%, long-dated bond around 14%. But when you compare that to inflation, inflation right now is about 19.64% as of July, and our expectation as our year end is that it's going to be even close northward around 20-21%. So in terms of real return, investing solely on in fixed income might not cut it for an investor. But when you combine all of these asset classes in an optimal portfolio, I think that is just the best way to hedge against the volatility, because the truth of the matter is 2022 has come with its fair share of volatilities. 2023, as we venture into it, would also experience uncertainties. We experience some events that would definitely create shock in the capital market space. So I think in a nutshell, the best way is to have an hybrid mindset when investing in or taking positions in the capital market. And then we've also seen feedback in the comment section saying, oh, I'm only interested in foreign denominated asset. But of course, we also have Naira obligations. So how do you tie your liabilities to your assets when you still have some Naira obligations? So I think having a combination of all the strategies is very key in the current climes that we are in. We might not be able to avoid the volatilities, but of course we can control how we respond to it. Yeah, thank you, Raphael.
Interesting. Thank you very much, Joshua, for that comfort that you've provided. So again, Joshua has said to us that we need to diversify our portfolio. We need to look at having a portfolio, and we need to diversify that portfolio. And I think that also responds to the concerns around inflation. Going to further dissecting the survey results, we will now be speaking to the only lady on the panelist, Ifeoma Okoli. She's a senior portfolio manager. And Ifeoma, this is further dissecting the results you've seen as regards the survey. If you're to look at the situation of the Naira today, what can you say about this, and how would you manage this, looking at the portfolio opportunities that are there today?
Thank you very much, Raphael. Before I get into answering your question, I'll just like to chip in also some addition to what Joshua had mentioned earlier. I mean, doing that, I'd like to take us back to Wale's introduction. You know, there was something he said that was very, very important, and I think I need to reiterate again, even as I, try to respond as best I can to the question, or try to address the outcome of the survey, which as much as possible at times like this, it's very, very important for each and every one of us to, as investors or potential investors, to dumb down the noise and try to, adopt a very disciplined approach towards assessing our investment options. It's very, very important, because at times like this, there's always that natural tendency to run to one side, like in quotes, head mentality, and given all that's going on. With all that Joshua has said, there actually is a lot of, challenges we've experienced this year in the equity space. But I would also like to highlight that it's also at this type of times that there are opportunities for investors to step in and create value for the long term in particular, and for investors that have patient capital. I'll recall in 2020, at some point in Q1 then, when the markets were tanking, it was like, everything was going down. At that point, you would be jittery. But the investors that stepped in at that time adopted a long-term approach, tried to be a lot objective, took in positions and actually made money. So I also feel that in this environment, that opportunity still stands. We've seen valuations come up significantly over the last 2 to 3 years for the banks in particular. Currently, their dividend yields are quite attractive. Mustafa had highlighted, that during his presentation. They're trading at, book values that are price to book values, PBs that are relatively lower compared to say 5-year averages. So for individuals that have a long-term view and have patient capital, I think there's some value there. Even in the agri space, there are opportunities there. So I think, we should also try to seek opportunities, because I believe that there are opportunities that, exist. Now, moving on to, concerns about, dollar investments, it's really valid, right? Even if an individual doesn't have direct dollar liabilities, we're all impacted by it. Most of what we consume is imported, so I think we all feel the pinch. So the concern around devaluation is very legitimate, and as individuals, like Joshua had mentioned, it's always good to take a portfolio approach. So as we look at asset classes, fixed income, we could also do the same thing with regards to currency, really. So we have some Naira, and then we also make, dollar type investments, help us hedge against devaluation. One of the ways we can do that, I think, what is really low hanging fruit, and to a large extent, I'll say, a lot of investors that might be conversant with would be Eurobonds. Eurobonds give access, to make dollar investments. You get dollar returns. We have a lot of funds out there that provide, this type of access. So you have the the Eurobond funds, things like that help. And for investors, especially for retail investors that don't have the kind of liquidity to approach that market directly. So the Eurobond funds address, that. And I would also, like to say that given all that's going on with the macros, especially in developed markets, there is actually some argument to be made for investors to begin considering purchasing US Treasuries directly, just because of all the risks going on. I know that in 2020 with Zambia, there was talk about restructuring. This year, we're seeing similar things with Ghana. There's some chatter around, will there be a possibility of some restructuring? So just to be able to diversify across the risk spectrum, we think that investors should actually begin to consider direct investments in US Treasuries, in US corporate debt. Obviously, there will be a risk-reward trade-off, but just to try to create some sort of diversity with regards to your dollar fixed income investments. For the equity space, I also believe there's value there. Similar to my views with the domestic market, in 2020, you would see that investors that had adopted a more thematic approach to the market. So basically looking at which sectors do I think will perform or outperform, given the environment. So in 2020, if you had invested in pharmaceuticals, if you had invested in tech stocks, you most likely would have made a lot of money. So it's the same thing right now. What sectors do we think would outperform the market? What comes to mind, from where we stand is energy stocks, for instance, given all that's going on with Ukraine, Russia, and then the energy crisis in Europe. Also, looking at renewables, given all the talk around global warming and ESG investing, opportunities, I think there are opportunities there. In an environment where you have rising fixed income rates or rising interest rates, you would expect the banks to perform well. So I think, even looking at US equities, we should keep an eye out on the banking sector. And then finally, I think to round up, how do we access this? I guess someone might be asking. I think it's the ETFs, like Joshua had mentioned, provide a viable means to which to access the market, especially for retail clients who don't have the kind of liquidity to get into these markets directly. There's some opportunity coming up with real estate. Yes, real estate has been, US housing market has really been hot for a couple of years now, but I think in the months of June and July, we began to see markets soften a bit. So this is not to say jump into real estate now. And this is for HNI clients that are looking at wealth transfer. The recommendation is not to get into the market right now, because in reality, valuations are still higher now than they were, pre-pandemic time. So it's just for us to keep that in our radar, to ensure that, when those opportunities arise, which could, right, anytime soon. Mortgage rates are currently, I think, around 6% in the US. With the Feds raising rates, there's every likelihood that those rates will keep going up, and then that could dampen demand. So there's some opportunity there. Thank you.
Thank you very much, Ifeoma. I can see that confidence. I can see, the confidence, saying to us that, hey, look away from all these uncertainties, stay focused, be disciplined, and then you're a bit more specific in terms of going into the different sectors where those opportunities really lies, making comparison to what we experienced in 2020, which turned out to be very good positive results for those investors at that time. Applying that same steps at this time as well, they're expected to use the same results that people are tapped into in 2020. So thank you very much, Ifeoma. Very well said. Going into the Q&A section very quickly, just to take some of the questions from our clients here seated with us. Someone is quite worried. And the question here is, what's the security of our foreign investment through ARM? Ifeoma, would you like to take that? Would you like to respond to that?
Thank you. With regards to how safe your funds are, I'll first start by saying they are very safe. Most investments done are through a fund structure, really, and that is regulated by SEC. So there, you have a lot of checks and balances. You also have trustees in place. So, SEC has put in structures to ensure the safety of investors' funds. So, there's really no concern about, security and safety of clients' funds. Thank you.
Thank you very much, Ifeoma. The other question here is, how does inflation affect my investments already with ARM? Mustafa, would you like to shed some light on that?
Sure, absolutely. So, of course, there's a rate of return that you get on your investments, and there's the real rate of return, and that is essentially taking into account inflation rates, right? And this is something that was quite prevalent within the fixed income space, for example. And there was that complaint that with yields remaining quite stagnant for quite a while and not seeing inflation spiraling, the real rate of return was not as attractive anymore. And that was also one of the factors that is sort of acting as a repellent to foreign investors when it comes to Naira-backed assets, right? So that is the way that inflation could affect your investments. If you look at it on a more basic level with a more basic explanation, right? If you were earning 2%, right? If you're earning 2% on a particular investment, right? However, your non-discretionaries, right? Your needs, your rent, for example, the fees you have to pay rise by 5%. Then there's the real rate of return is not when it comes to relative to what you have to spend on, it's not particularly beneficial, is it? So as inflation rises and prices of goods and services rise, right, your purchasing power reduces, and if the yield that you're earning does not meet up to the inflation rate, then you will still be stuck below that level, that threshold. So
thank you very much, Mustafa. Thank you so much for that response. Joshua, very quickly, for those of us that still hold Naira in the short term, what can we do within the short term with Naira for our short-term goals, things that we really want to achieve between now and maybe the next 12 months or perhaps 24 months? What can we do with Naira?
Okay, so a couple of things comes to mind. So in the money markets, you have improvements in fixed income yields. Like I mentioned earlier, commercial paper instruments, the last one that was offered this week rather, which is about 6 months, the offer price rate was around 11-12%. And then we have a 9 months instrument offered around 16%. So I think this yields from corporate issuers actually are worthy of consideration. I think the best thing to do in the short term is to take advantage of the high yield environment. And I think at the moment now we have an inverse curve, right? In the sense that rates in the money market space are even higher than the long dated bonds. So I think taking advantage of a 16-17% fixed income investment, actually, it's something that we can do in the short term. And then when you now look at the equity market, right, the reason why we are seeing a lull in the market is because the macro story is not so great right now. We are in a situation whereby there's uncertainty about who is going to take over the helms of our affairs come 2023. So there's that election fear. So between now and the next 9 months, we will have our elections. We expect that there should be improvement in activities and sentiments in the equity market. And then when you look at the results of a lot of corporates, the results have been, I think, to a large extent, decent. We've seen corporates that have done good in terms of their top line and also bottom line. When you look at the banking sector, despite the competitive environment, the banks have always found a way to remain resilient in terms of churning out good numbers. I think GTB's top line was around 11%. We have Stanbic doing a top line improvement of about 40% and bottom line improvement of about 30%. And I think they even increased their dividend payout by 50%. So what that speaks to you that come full year, when these companies will be paying their full year dividend, right, there will definitely be an improvement in terms of dividend yield. Taking a company like GTCO, for example, GT currently trades around 19 Naira 80 kobo. So when you compare that to the dividend that they paid last year, which was 2 Naira 70 kobo, that's a dividend yield of about 13.5%. If you annualize that, that's about 20%. And this dividend typically will get paid, between now and let's say May next year. So that is still less than 1 year. So I think in the short to medium term, we need to take advantage of the high yield environment and then also hunt for high paying dividend, but dividend companies rather, but not just any dividend company. You have to also compare the fundamentals and also look at the entry level, because you also need to time your entry when investing in these high dividend paying companies, because also you need to compare your technicals and also your fundamentals, because on the flip side, there's also the capital appreciation bit of it, which will definitely affect your investment. So I think in the short term, those are the instruments that we can play.
Thank you very much, Joshua. So again, the money market fund is in excess of 10% today. That's one of the instruments you can use, even though it's not a positive real return. But I mean, in the short term, what else can be a lot better than that? Treasury bills, commercial papers, and some stocks as well, just like Joshua had alluded to. So those are the things we can actually do. So as you've heard from our experts, they've been able to break it down into short term, medium term, and long term. Things you can do in the short term has been spelled out. Things you can also put funds into for the medium to long term has also been spelled out. One of the things I also like to add at this point is that at ARM, we're also looking at opportunities within the fintech space, both locally and in the global space as well. So if these are things that you would like to know as an ultra HNI or an institutional investor, we will share our contact details at the end of this event, and you can reach out to us for more information on that. I'm sure we all had the information about Paystack some years ago and their relationship with Stripes and what turned out for the investors at the end of that transaction. We also see how Flutterwaves is doing currently. I mean, those are fintechs. And those are the opportunities that we're also looking at for some of our HNIs as well as institutional investors at this point. So if it's something you would like to know more about, we will share the contact details at the end of this event, and then we will be able to share more details with you if you do reach out to us. Here's another question. What are your thoughts on the FX situation? Any improvement in sight? Also on the global economy? what do you foresee on the Niger's risk over the next 12 to 18 months? Ifeoma, did you get that question?
Yeah, so I believe I heard you. So let me just rehash what you said to be sure I got the question well. I think the first question is around currency, outlook for currency. Yeah. And then the second is on the global outlook over the next 12 months. Yeah. Okay. So for currency, I think that from now to the end of the year, pretty much where we are, basically, because really we don't really see a lot of improvement coming through. Accretion to FX reserves still very subdued. We're unable to attract FDI and FPI inflows. So that means, reserve position will be challenged. Last year, we got some support from the Eurobond issuances. We were able to raise some earlier this year, but right now we're unable to go to that market again, just because of how high interest rates are right now. So it doesn't really look viable. So the outlook for reserves, isn't really positive. And what that means is that, the outlook for currency too also really isn't positive. So most likely what we would continue to see is the strict capital controls that are already in place remaining there. CBN would most likely remain the main supplier of FX in the market. And, we would continue facing these challenges. With regards to devaluation, I think the pressures will continue to be there on the parallel market leg. CBN is still not selling to BDCs. I don't see CBN, reversing that policy anytime soon. I think, what CBN has done so far this year, it's been more like a steady, gradual move in the FX rate, at least the INE FX window. And I think that's what CBN is going to do. They're not going to right now just jump into a hardcore devaluation. I think it's going to be slow and steady. For next year, the outlook also largely to an extent, I believe, depends on the outcomes of the election. I don't know who's going to win, but I think that irrespective of who wins, right, there would be some sort of policy leaning, with the government, and you might see that bear down on the CBN in a way or influence CBN action in some way. So that's it with currency. The concerns of a devaluation, the expectations of devaluation, still very, very real. With regards to the outlook for, the global space, I think right now, the major concern is around stagflation, where economic growth is slowing, but inflation is is rising. We know the US inflation figures came out, I think a couple of days ago, hotter than expected. The Euro area, they're facing the same issues, and it's expected to get worse with, with the energy crisis going on across that space. So the challenges, still remain. The concern, I think, going forward and even into next year is the fact that, if the Feds keep raising rates aggressively, it might raise a little bit of, there might be a debt crisis next year. We're already beginning to see a little bit of that with what is going on with Ghana, all the chatter around pricing, the need for especially developed and frontier and the impact on frontier and emerging markets. So the outlook generally isn't quite positive for the global space. I think I would summarize it by saying it's very highly uncertain, because anything can happen. You could have, geopolitical tensions escalate, between Russia, Ukraine, could be worse than it is, or we could also have things happen with China and Taiwan already this year. There's some undertone and tension in that area that could also, throw a spanner into the wheel. So I think for the next couple of months, things are really, really, there's just a lot of uncertainty in out there. Thank you.
You heard it from Ifeoma once again. There's a lot of uncertainty out there, but the key word to take away from here today is that look away from those uncertainties, stay focused, stay disciplined, focus on your objectives, your goals, allow your investments to take their time and deliver the perfect reward for you. Still hold on there, our panelists. What we're going to do now is to unmute one or two people and have you ask your questions live. And then the panelists will definitely do justice to it. So if you want to speak, if you have questions you still want to ask us, for those questions we've not responded to in the Q&A box, please continue to send in your questions. For those we haven't responded to, we'll provide those answers and send them to you along with the recording of the event. But if you would like to speak, we will be willing to use the next couple of minutes to unmute and respond to your questions. So you can raise your hand and then we're able to do that. Okay. Okay, so can we unmute Mr. I guess this is male, but let me just go back. Maxwell Ogon. Oh, sorry about that, but Maxwell, yes. I think that's the name. Please go ahead and speak, sir. Please unmute your mic and speak. Okay, what about Wobi Wenenda? Can you unmute your mic and speak? Wobi Wenenda. Wobi Wenenda. That's not working as well. How about Solomon? I think Solomon should be able to speak. Solomon Untukidem.
Hello.
Sorry if I didn't get that correctly. Yes,
hello,
please go ahead, sir.
All right, I so much appreciate this opportunity to talk to us and also to learn one or two things that is going on in the financial space in Nigeria and the world globally. My concern is more on wealth, investments and wealth. And we know that one needs to have enough, even a little, to do investments, because you cannot do investments with nothing. And sometimes it's also difficult for one to accumulate what to use and then do investment. So I might just digress a little bit from the main topic. So is there a kind of a scheme, like a loan scheme by ARM, where one can get the loan money from and then do some businesses or investment? And also we know that it's through those platforms that enable loan scheme, it encourage people to do more of voluntary pension than the main pension that the platform that are on. They do more of voluntary ones because they know they can take more from their salary and keep while they take loan and then pay little by little and then get that to do their businesses and also invest in whatever thing that they want to invest in. So is ARM thinking in that direction, or do they have one currently running?
Okay, thank you very much, Mr. Solomon. I think I'm in a position to respond to that question, so I'll save the panelists the stress. We're currently working on something. We've had this request, not just from you. So we're currently working on something, and once that is ready, we will definitely let our clients know about it. So it's not new to us. It's a request that we're aware of, and we're trying to put something together in that line. Thank you very much, Mr. Solomon. Because of time, we will not be able to take further questions. We'll just quickly take the final word from our panelists. Joshua. Oh no, Joshua, hold on. Sorry. As it is, it's ladies first. Ifoma, please, you go ahead.
Thank you, Raphael. I think my parting words would be ignore the noise and adopt a disciplined approach towards investing. Thank you.
Thank you very much, Ifama. Joshua, your turn. Final word to our clients.
Okay, so I think key takeaway would be in constructing your portfolio, you need to consider a lot more things. You need to think about your investment objective, think about your risk profile, and then also consider a lot the activities in the market when building your portfolio. So if you need help in doing this, you can reach out to us as a security trading firm, as an investment and asset management firm. We are there to help you through the process.
Thank you very much, Joshua. Mustafa, final word.
Yes. So what I would say in addition to that is for us to be quite cautious as investors when times now that there's a lot of uncertainty. So it's very important that we're properly guided, right? And that is, what we at ARM are here for, to help you through in order to optimally grow your wealth.
Thank you very much, Mustafa. And you heard it from the experts again. If you're not a professional in it, speak to professionals, speak to us at ARM. Moving on, is to speak to you about our overview. Very quickly, key takeaways from the session today. Thank you very much, our panel. Thank you for your key takeaways. Clearly, there are uncertainties, but the key word is that these are global impacts and these are things happening within the economy. So they are there, but the key thing is just for us to look away from these uncertainties. Let's remain focused. Let's stay disciplined. Let's focus on our objectives and our goals. They're simply distractions. So let's move on with what we want to do and not bother ourselves with these uncertainties. Looking at our short-term goals, money market, what we can do with our short-term goals, the money market for commercial papers, treasury bills, even though the yields are not, the yields won't give us a real return in the short term, but at least it's worthwhile ensuring that our money works for us with the best that we can get within the system at this point. For medium to long term, once again, I can't stop making reference to what the experts have told us this morning. For medium to long term, look at the capital market. This will give you returns over time that will still preserve your purchasing power, regardless of what we're facing at this point. Try to have a portfolio, diversify your portfolio, look at stocks with strong fundamentals, and look at FI instruments, tap into the yields opportunities in the FI instruments as well. And then look at some alternative investments. We made reference to real estate as well, both here and abroad. And we also spoke about fintech opportunities that we're also looking at. So these are opportunities to look at. Yes, there are uncertainties. We agree that those are happening, but look away from those, stay focused, and be disciplined at your objectives. Overview, for those of you that don't know that this is who we are. This is what we do. Our business has been created in such a way that we're here to cater for you from cradle to the retirement days. We also have services for you to be able to transfer your assets or your wealth to the next generation through our wills and trustees business. So this is who we are right in front of your screen. And then we thank you very much for joining us this morning. To reach out to us, this is our contact details on your screen as well. Send us an email at events@arm.com.ng, and we will be there to respond to those queries as quickly as possible. Once again, we thank you very much for spending this hour with us. We do not take this for granted, and we look forward to doing this with you again very, very soon. Thank you once again, and enjoy the rest of the day. Bye-bye for now.